Welcome back to Investing Talk podcast. Today, we are examining one of the really hot frontiers in tech, quantum computing. And specifically, we're looking at the company, quantum computing. We're tackling that central question that everyone seems to be asking, is this stock a good time to buy now? And hey, if you want us to look into a specific company, please do leave a comment below. Also, you know the drill. Please hit subscribe, like, and comment. It really helps support the show.
Absolutely. And when you look at quantum computing right now, it's fascinating. It's kind of sitting at this high-stakes intersection. You get huge analyst optimism pushing it one way,
Right.
and then you see institutional money flowing in pretty rapidly on the other side. Our sources are really emphasizing that this next quarter, well, it's basically make or break. It turns this from just a long-term idea into a very immediate momentum situation.
Okay, yeah, make or break. Let's unpack some of that recent drama then. Because the volatility over the last 3 months, say August through October 2025, it's been pretty wild. The optimism really peaked, didn't it, in early October? There was that huge analyst upgrade.
Well, it wasn't just any upgrade. It was like a massive vote of confidence. Ascendiant Capital Markets took their price target from $22
Yeah.
all the way up to $40. $40.
Wow.
And that alone popped the stock, 27.3% in a single day.
That's huge.
It is. That's the market basically re-rating the company almost overnight, just
Yeah.
based on one firm's, belief in that long-term potential.
But okay, here's where we need to maybe pump the brakes a little, introduce that counterpoint. Because while the analysts are shouting $40, the CEO, Yuping Huang, he was doing something different. He sold 1 million shares at $14.41 back in October. That cut his ownership by almost 4.5%.
And that's a critical piece of information. You absolutely have to weigh it. I mean, how does the market justify being so bullish when the guy who arguably knows the company best is, well, selling off a pretty chunky part of his stake?
Yeah, it's a disconnect.
Usually, insider selling like that signals maybe things are cooling off, but the market just seemed to shrug it off. It suggests maybe that Ascendiant upgrade narrative was just too powerful at the time.
Or maybe that bullish story is being propped up by just how good they are at raising money. Back in September, they closed that huge private placement, $500 million. And it was oversubscribed.
Oh, yeah. $500 million.
That's a massive war chest for a company at this stage.
It really is. And securing that kind of cash, especially oversubscribed, it shows incredible trust from institutions.
Yeah.
It gives them serious firepower for R&D, for expansion, maybe even M&A down the road.
Right.
And you see that institutional faith elsewhere, too. PFG Investments, for example, they started a completely new position in October.
Right.
So that just adds fuel to the idea that the big funds are really starting to pile in, or at least pay close attention. August also saw, growing media buzz and higher trading volumes.
Okay, so that strong capital base, that's kind of the backdrop as we shift focus to what's coming up right now. The last few months were about raising cash and getting analyst love. Now it feels like it's all about execution. So what are the specific dates, the events on the calendar that are likely to move the needle through, say, January 2026?
Well, the big one, the main event everyone's laser focused on right now is the Q3 2025 earnings release. That's scheduled for October 28th, 2025. After that $500 million raise and that huge upgrade, investors aren't just going to be happy with promises anymore.
Right. Show me the money or the progress.
Exactly. They need to see tangible proof. Is revenue accelerating?
Yeah.
What's the detailed plan for using that cash? How's the strategy playing out?
Okay, so really two basic paths forward from that earnings call. What should people be looking for in either case?
Well, path one. If quantum computing reports, real meaningful progress, maybe they announce some key contracts, maybe they issue better guidance for next year, then you could see some serious upside volatility. The stock could really pop again.
Okay.
And path two.
Path two is disappointment. If the report is kind of meh, or if their plan for deploying that capital seems fuzzy, then the stock could see a really sharp correction. Precisely because expectations have been pushed up so high lately.
Makes sense. High expectations cut both ways.
Okay.
Beyond earnings, we also get a look behind the curtain at what the big institutions are doing, right? Around November 15th. That's right. November 15th is roughly when we'll start seeing the 13F filings roll in. For listeners who aren't familiar, 13Fs are basically quarterly reports where large institutions, anywhere managing over $100 million, have to disclose their holdings.
So it tells you if the big hedge funds or mutual funds were buying or selling quantum computing during the previous quarter.
Exactly. It's a crucial peek into where the smart money is placing its bets, or if they're getting out.
Got it. And then later in November, around the 30th.
Yeah, towards the end of November, you've got Potential ETF and index rebalancing events. Think about it. If a major tech ETF, or maybe a new quantum-focused ETF, decides to add this stock or significantly boost its weighting.
Then they have to buy shares, regardless of the price that day.
Precisely. Forced institutional buying. That can drive the price up totally separate from any news coming from the company itself.
Okay, that covers the near-term market stuff, the calendar. But let's pivot now to the actual business. What's the underlying health, the fundamentals? What's justifying all this interest and that huge capital raise?
Well, what's really interesting here, I think, is their competitive position, their moat. And we need to stress why this is different. Quantum computing is flagged as one of the very few U.S. pure-play quantum software companies.
Okay, software, not hardware. Why is that such a big deal?
Because look at the giants, IBM, Google, others. They're pouring billions into building these incredibly complex, fragile, expensive quantum computers. The hardware. Quantum computing, though, they're focused on the brains, the proprietary algorithms, the patents, the software that runs on quantum machines, whether it's theirs or someone else's, to solve real business problems.
Ah, okay. So they're aiming for potentially higher margins without that massive ongoing hardware R&D and manufacturing costs. That makes a lot of sense. All right, let's talk revenue then. The numbers seem small now, but the growth is there. It was, what, $459,000 in FY 2025, a 23% increase?
Yeah, about 23% year-over-year growth, which is decent. But you're right, the market isn't pricing the stock based on $459,000 in revenue. It's pricing in the future.
And what does that future look like, according to analysts?
Well, the consensus forecast expects that revenue number to explode, basically.
Yeah.
Jump to $1.89 million for the upcoming fiscal year 2026.
Wow, nearly a fourfold increase.
Exactly. That's not just, slow organic growth. That signals that analysts are anticipating major customer wins, successful rollouts of their software for things like optimization, logistics, real commercial traction.
But the elephant in the room, they're still not making money, right? They're pre-profit. That always makes some investors nervous.
They are. And that's completely normal, totally typical for this kind of early stage disruptive tech company. The focus right now is absolutely on scaling the business, grabbing market share, not on maximizing profit this quarter or next.
Okay, but are they moving in the right direction?
Yes, and that's key. If you look at their earnings per share, the EPS, a key profitability metric, it's actually improving quite dramatically. They went from negative 73 cents per share in FY 2024 down to an estimated negative $1.17 in FY 2025.
Okay, that's a significant reduction in their loss per share. Is that just cutting costs, or is it those initial sales starting to scale up?
It's likely a bit of both, but primarily the scaling effect. It suggests that the sales they are making have decent enough margins to really start offsetting their operating costs as that revenue ramps up. And this brings us back to that $500 million they raised.
Right.
Having that massive amount of capital plus a relatively low amount of debt on their books, that reflects the market's confidence that, yes, they can execute and get to profitability faster than maybe some of those capital-intensive hardware players. They trust the plan.
Okay, let's zoom back in on the stock itself. Quick snapshot. As of early October 2025, it was trading around $24.73. Where do the analysts see it going?
Well, the overall consensus rating from analysts is a strong buy, very positive. The average price target is sitting at $26.33. So a little bit of upside from that $24.73 level.
But the big number.
But yeah, the number everyone's really watching is that high-end target from Ascendiant, which is $40. So the most bullish analyst out there thinks there's still, over 62% upside potential from where it was trading?
That's a big potential jump. And technically speaking, does the chart, the price action itself, back up this bullishness?
It does, actually. As of that snapshot, the stock was trading above both its 50-day moving average and its 200-day moving average.
Okay.
And trading above both of those key levels is, the classic technical definition of a confirmed uptrend. Things are heading in the right direction, chart-wise. And our sources also mentioned something interesting about the volatility.
Yeah, it's been high, obviously.
Extremely high, yes, like that 27% jump. But it was described as constructive volatility.
Constructive? What does that mean?
It means that when the stock price dipped, buyers stepped in. People were using those pullbacks as opportunities to accumulate shares rather than panic selling. That suggests underlying strength and belief in the story.
Okay. And what about the everyday investor, the retail crowd? Are they excited about this one?
Oh, absolutely. Yeah. You look at the chatter on financial forums, social media, there's definitely robust retail interest. The retail community seems, by and large, very positive on the technology, on their niche as a software player. and on their potential to be a leader in this, really transformative sector.
All right, now for maybe the most exciting part. The rumors, the unconfirmed stuff swirling around that could, potentially cause another huge jump overnight. These are the speculative catalysts. What are the big ones people are whispering about?
Okay, top of the list, number one. Rumors of a major strategic partnership. We're not talking a small deal. Think a top-tier cloud provider, like an Amazon AWS or Microsoft Azure, or maybe a huge semiconductor company like NVIDIA or Intel,
Wow, okay.
deciding they need access to quantum computing's algorithms. That would be instant validation, massive scaling potential.
Huge. Okay, what's number two?
Number two is speculation about a breakthrough quantum advantage announcement. This is kind of the holy grail in quantum. It means demonstrating they can solve a really complex real-world business problem significantly faster or better than any classical computer or any current competitor's quantum approach. That would be massive news.
A game changer. And number three.
Number three is the M&A angle, merger and acquisition interest,
Uh-huh.
or even a full buyout approach. If one of those tech behemoths, a trillion-dollar company, decides they absolutely need to own a dedicated quantum software asset to compete long-term.
Quantum computing looks like a prime target being pure play.
Exactly. They're a natural fit. And mixed in with that, you constantly hear these sort of persistent whispers about landing significant government or defense contracts that just haven't been officially announced yet.
Okay, those are definitely exciting possibilities. But we have to ground this in reality, too. We have to talk about the risks. What are the core dangers listeners absolutely must consider before jumping in?
Yeah, absolutely crucial. Risk number one, and it's probably the biggest, is execution risk. We talked about those exciting revenue forecasts, but bottom line, they are still free profit. They burn cash. They fundamentally depend on being able to keep raising capital or getting revenue up fast enough until they're self-sustaining. They need to execute flawlessly on getting products out, signing clients, basically delivering on the promise to justify that valuation. Any slip-up could be painful.
Okay, execution risk. What's next?
Second is the obvious one, competition. This quantum space is getting crowded, and it's fiercely competitive. While quantum computing has that software niche, you've got giants like IBM, Google, Microsoft, startups flush with VC cash. They're all pouring resources into this. They could potentially develop competing software or use their scale to disrupt the pure play guys. Is a real threat.
You can't ignore the 800-pound gorillas in the room.
Okay.
And the third major risk.
And the third is really inherent to the whole sector, nascent industry risk. It's still early days for quantum computing applications. So the company's exposed to the timing of the market. What if broad enterprise adoption takes 5 years longer than everyone currently expects? What if regulations change?
Yeah, if the whole market develops slower than hoped.
Exactly. That could really crush valuations across the board, especially for companies burning cash. Of course, the flip side is if adoption accelerates faster, that's where the massive upside comes from too. It's a timing bet, partly.
Okay, so pulling all this together, the catalysts, the fundamentals, the technicals, the rumors, the risks. What's the overall take for someone considering the stock right now?
Synthesizing all these different threads, the investment thesis honestly looks strongly bullish. We'd probably rate the overall conviction, say, an 8.5 out of 10.
An 8.5, that's quite high.
Oh, yeah. It is. And it's justified, we think, by that combination of factors. You've got the strong near-term catalysts, that imminent earnings report, potential product news, institutional flows, and you pair that with the long-term potential of their proprietary technology. That software moat they seem to be building successfully in a critical future industry.
So it sounds like you're saying the stock could be interesting for two different types of people, like maybe the near-term trader who wants to play the volatility around earnings and those upcoming events, and also the longer-term investor who just wants focused exposure to the whole quantum computing revolution itself.
Precisely. It seems to tick boxes for both approaches right now, which is unusual. The high volatility serves the trader, while the underlying tech story serves the long-term holder. And, given all that speculation swirling around, here's a final thought, maybe something provocative for you to chew on. Of all those unconfirmed catalysts, we talked about the partnership, the breakthrough, the government contract, the M&A, which single event, if it were suddenly confirmed tomorrow, would cause the most immediate, most fundamental reevaluation of quantum computing's value? The one thing that could blow past even that $40 target instantly. Is it the massive government deal? Or is it the definitive buyout offer, something to mull over as we wait for those Q3 earnings?